What are our thoughts as we look ahead, and what are our key priorities? Stating the obvious, speaking in March 2026, but it's an incredibly uncertain economic environment. Oil is over $100 a barrel, there's a nascent regional war in the Middle East, and we're seeing that reflected on the markets. But this volatile backdrop, we believe, reinforces the benefits of our approach. An approach which focuses on resilience, manager selection, and investing in a disciplined and consistent manner rather than trying to time the market. Let me pick up on a few of these themes. Manager selection is becoming increasingly important. Various market reports describe this as a K-shaped recovery. I must admit I had to look this up when I first heard the term, but essentially it represents a divergence, with some going up and some going down. The best managers are increasingly standing out from the competition. Research from the Boston Consulting Group states that from 2003 to 2022, top quartile private equity funds outperformed bottom quartile peers by roughly 13 percentage points. Secondly, that history is showing that attempting to time the market rarely works. We do best by continuing to invest and commit in a disciplined fashion, aiming to achieve vintage diversification, continuing to partner with top-tier managers who have multiple levers in their value creation toolkit, who invest across cycles, and we believe that's the best way to generate attractive long-term returns. So our priorities are clear. Number one, maintain a high bar and continually monitor the portfolio and actively manage it to optimize performance. Secondly, the byproduct of a strong realization year is that many of our larger exposures have been exited. Now, we want to gradually restore our larger company exposures as we believe that portfolio concentration will help to generate alpha. And finally, balancing long-term and short-term shareholder returns through investing, buybacks, and dividends. Markets have seen significant volatility over recent weeks. The ICG Enterprise Trust Board has been proactive, executing a buyback every trading day in February in order to support our shares. But whether or not public market uncertainty picks up from here or reduces, we feel confident that we have a balance sheet that enables us to invest through cycles. We have a portfolio of mid-market companies which is resilient and diversified by sector. We have partnerships with managers who've weathered many economic cycles. And all of this, we believe, can result in long-term compounding growth for our shareholders.